All right, it's no secret that cryptocurrencies is the new rage, and this is not just an Indian phenomenon. It's one of those changes sweeping the world that nobody can do much about. Central bankers have been left wringing their hands in several nations around the world, but it is something that has truly caught the imagination. But to what extent? Now, there is this agency called Chainalysis that has put out a report which says that in India, the cryptocurrency investments grew 641% in the last 1 year. That's more than 6 times. In fact, India has a nearly 60% share of activity on decentralized finance platforms. The question now is, what is happening to all of these investors and investments in what is essentially a regulatory grey area? To speak on this, I have great guests on the show. Nischal Shetty comes back. Rachit Chawla speaks to us today, as does Mythili Bhusnurmath. Let me go across to Mythili first, just to get her take on what we've been seeing. Mythili, is this a cause for jubilation or concern? Because clearly there is a lot of liquidity as more and more investors are finding the stock markets attractive, looking at dismal interest rates from fixed income instruments. Perhaps some of that enthusiasm is flowing into cryptocurrencies as well. Mythili, I think you're on mute. We can't hear you.
My apologies. Yes, I was on mute. My apologies for that. But you asked me whether we should view this as a cause for jubilation or for concern. And I would say that we must view it as a cause for concern and in capital letters, every one of them capital letter. Because the fact is that even though the numbers show a very sharp increase, and we must discount for the fact that they start from a low base, there is no doubt that the involvement of Indians in this space is growing faster than what is both desirable as well as prudent. And we must ensure that this does not continue like this in a regulatory vacuum. And this concern of mine is not just shared by me alone, but by regulators all over the world, including by people in the Bank of International Settlements. In fact, I'd just like to quote from what Augustine Carstens says about cryptocurrencies. He says, mind you, was a former governor of the Bank of Mexico, that is the Central Bank of Mexico. And he described Bitcoin as a combination of a bubble, a Ponzi scheme, and an environmental disaster. And the similar sentiments have been echoed all over the world, including in the US, even though Jerome Powell did say that he's not going to ban cryptocurrencies. The fact remains that it's a cause for serious concern because there are implications both at the individual retail level as well as the macro financial stability, as well as economy level. So I could not but emphasize more and more that this is something that we really need to look at with serious concern. And I think the longer we allow it to continue like this in a complete anarchy, we are just inviting trouble. We need to come out with a regulatory framework. And this is something that both the Reserve Bank of India and the Government of India must wake up. Tomorrow might be a bit too late.
Nischal, how do you respond to that? It is right now the biggest flavor. There is no doubt about it. People are finding it exciting. Do these people know what they are investing in? Do they understand the risks with something that is this volatile? Or are they excited with the upward move overall that has been seen in cryptocurrencies?
Look, I think as far as regulations are concerned, we as an industry are ourselves pushing for regulations in India. And I think that would sort of be a good step forward for the industry. As far as the growth of the industry is concerned, I think it's just emulating how technology grows. Technology always, it starts slow and you have a niche and they operate in that and things are built. And then there's that hockey stick curve that appears where there's rapid adoption. And we are seeing that happen in crypto now. It's just the nature of crypto. It's so easy. It's just like how the internet adoption happened. You're seeing adoption of crypto happening. And I think governments all around the world are trying to understand this and trying to build the frameworks. The problem is you cannot use existing regulations on crypto because the nature of crypto is different. At one end, in the beginning, it feels like it's just currency, and then you realize there are other categories of crypto, like there are assets and utilities. So you don't have a framework which is already out there to just put on top of the crypto ecosystem, and that's where it's going to take longer for governments to regulate it. But I think what's going to happen faster is some sort of guidelines which will enable good actors to build better products in the space and keep out the bad actors. But I think the growth is amazing. It's like you said, it's almost 5 to 6 times in the last 12 to 18 months. And we've seen a ton of new startups in India. We've seen a ton of new investments coming in. We're still lesser compared to, let's say, the US, where there are a lot more startups, a lot more valuable companies going IPO in the US in crypto. So I think that way India is still not caught up with the US, but maybe in the next 2 to 3 years, we'll probably have a even bigger ecosystem here.
No, people are excited about it, no doubt. Rachit Chawla, as someone who advises people on how to invest their money, has cryptocurrencies now made it to your list of asset classes when figuring out what someone's portfolio should look like?
So definitely I see a lot of awareness and a lot of excitement around people who would like to invest in cryptocurrency. In fact, as an advisor, I don't even tell them, but they ask me that why you're not giving us cryptocurrency as an asset. Because see, since 2016, everybody has been advocating that crypto is risky, you shouldn't invest your money in assets like cryptocurrency, digital, you don't know which organization is backing it, what is the legal framework. But you have to admit it that since 2016 the crypto has given 120 times return. So the demand is huge. Now as an advisor, if I have to advise somebody, I always tell them, do not invest everything in crypto, but definitely start taking smaller investments and make it like an asset class which you can completely forego. I mean, you don't have to invest more than 5% of your net worth in crypto because the assets are very volatile in nature. If you invest more than that, then if tomorrow the crash comes, you would have no option but to sell it at the lowest possible price. So my advice to all the investors is that invest your money thinking that it might go zero tomorrow. What will happen is either it will come down so that you can invest more, or it will continue to rise. The basic fundamental why I see this asset class rising like anything is because pure demand and supply. Bitcoin demand is huge, and a lot of people are witnessing fear of missing out even right now. When it came down to $29,000 just few weeks ago, I saw a lot of people rush and they actually spend money in order to buy Bitcoins because they thought that, the same asset is at 50% of the value. So even tomorrow, if some crash might have to happen, I still feel the demand will always be there. So my advice to everybody is definitely with caution. This asset has already given 120 times returns in last 5 years. Now, if you're investing in it, there's a lot of risk involved. It's a high risk, high return asset. So invest as if tomorrow it might go to zero. You will be actually okay to ride the wave along to the very, high it might go up to.
Mythili, let me argue this another way. You've made it very clear that you think this frothiness and this exuberance is a cause of concern as well. But when Rachit talks about the sense of FOMO, people who are watching this and saying that in 2017 I sat it out, in 2018 I sat it out, 2019 I've sat it out, there is an opportunity there. Why should people not try and ride that wave? Is there any cogent reason not to invest in this as an asset class with the checks and balances like any other?
Simply because, as I said, it is far too volatile. As Rachit himself said, you make these phenomenal returns, but as in the case of the stock market, When you calculate returns, it's all a function at what point you enter and what point you exit. So let's be very clear. You could have entered at 60,000 and exited at 29,000, in which case you would have a hugely negative return. You'd have a huge loss. And I think both Rachit and Nischal are perhaps much too young, and they would perhaps not be so familiar with the economic history of the tulip mania. In the 17th century in Holland, there was this tulip mania when people went crazy and berserk about the tulip bulbs. And the price of a single bulb was enough to buy you a mansion in central Amsterdam. And then the entire bubble crashed. So periodically the world does go through this. And the thing is, as you always, it's a bigger fool theory. If you get in at the right price and exit because you find a bigger fool, then good for you. But if you don't, and that really is the reason why I think it's very important everywhere for authorities to bat on behalf of those who really do not know what they're getting into. Once they are aware, if they are fully aware, and mind you, we're talking about a country like India, where literacy itself is so low, let alone financial literacy. So I think it's very, very important that if we inform people that this is a completely unregulated market, it is a speculative asset, there is no backer. There is, even in the case of, you talk about, and I think Nischal talked about technology and crypto. Now let's be very clear, you need to distinguish between the two. The technology is very good. The distributed ledger technology can be used in many things, which is why even in the case of central bank digital currency, it might be used. But let us not mix up the crypto with the technology. The technology is good, crypto is not. Because cryptocurrencies, they do not function the three basic intrinsic functions of money: a unit of account, a store of value, a medium of exchange. Cryptocurrencies, there's no issuer, there is the kind of trust which is imperative for fiat currency, for sovereign issued, fiat currency is missing. The only quality that they perhaps qualify is store of value. When the store of value has no stability at all, cryptos when they were issued was $500 and went up to 60,000 within about 6 years. And as Rachit himself said, 29,000, 60,000, where are you? So I think people in countries like India who have very little cushion and very little appetite and ability to bear risk should be very cautious while getting into this. So my thing is, just like in the case of mutual funds, you make a very clear disclaimer, are subject to market risk. Please read everything before you enter. I think it's very important in the case of cryptos also, we put that across. And if you ask me, if you put them in order of danger, cryptos top, most dangerous, then come stable currencies where you link it to a fiat currency. And then perhaps best of all is central bank digital currency, which is what central banks all over the world are contemplating, purely to deal with the threat posed by these cryptocurrencies, which are a serious risk to financial stability, economic stability, and we could be inviting a great deal of trouble if we allow it to go unchecked.
You know, the views on cryptocurrencies worldwide are so divided, it's so polarized, and I'm glad we can reflect some of those differing and diverse views on this debate today. It's what truly makes it a debate. So Nischal, would you like to come in? Mythili has compared the crypto craze to the tulip mania in the 17th century, and she talks about a disclaimer being attached with these investments like you have in mutual funds, so that those coming into it at least know the risks. Do you think that that is required, and your responses to her comments?
Look, I think a lot of these arguments were true for the internet startups as well, and the internet has gone through its own boom and bust cycles. If you looked at the valuations of internet companies in the 1990s and the 2000 era, the offline businesses were like internet's a scam. And we are not valued at this rate. Why is that the internet companies are valued at 10 times more than us? And today it seems like a normal, because we realize one thing, that internet scales really fast. And that's the whole thing with crypto. Crypto is, for the first time in the history, we have this global financial market being built. Until now, the financial markets have all been bound by geography. We are all bound to the nation's economy, and all of the financial instruments that we have access to are all bound by where you live. And here is a new technology that makes it possible to have one financial world. And it's going to be crazy. It's going to be crazy for a while, because once you understand this, there's no going back. I'm yet to meet someone who's understood the technology. For example, the general thinking is that everything crypto is a currency, which is the first sign that you need to get deeper into understanding this. Crypto is primarily divided into four major categories. Currency happens to be one of those. The other is assets, utilities, and it can also be a security. So depending on what it is, for example, Bitcoin, for a long time, people thought Bitcoin was a currency, but it replicates more of the properties of gold. It's limited in number. It is valued by the network, the trust network that it has, which is the number of people in that. Today, there are over 100 million people who own Bitcoin. And that's where the value of Bitcoin comes. Now just to focus on Bitcoin, 100 million people in the world are owning Bitcoin. The internet has 4.73 billion people. And all they need to do is just be educated about this and they get access to owning Bitcoin. So that's this large market in front of you where, as people understand about Bitcoin, they're going to hold it. And there's only 21 million. So this is where the economics of Bitcoin works. But that's not true for the other cryptos. Other cryptos are dependent on what are the use cases behind them. For example, Ethereum. That's like a global supercomputer where you can run programs today without needing to have to use an Amazon or a Google for hosting your programs in a completely decentralized manner. And that's where the token of Ethereum, which is Ether, gets its value. So it is all dependent. When we talk about central bank digital currencies, I believe I've been, in fact, a proponent of pushing for that. But that does not mean you don't need the other cryptos out there. It's like saying that government has a website, why are there other websites needed? Every website has its own function and utility. It's the same with crypto. And I think as we discuss and debate more, these things will get clearer. And then, I think as these things get clearer, you'll get involved in it.
Yeah, well, Rachit, I'm going to give you the last say on this. I have realized that those who are passionate about cryptocurrencies are all in. They're completely convinced, and those who are not are completely convinced that it's a bad idea. But do you think it is safe to start allocating a little bit of your portfolio in cryptocurrencies so you're not just sitting on the sidelines and maybe in a few years from now wondering that why didn't I catch that bus? Or maybe on the other side, being glad that you escaped what has to follow because we really don't know what's coming. Do you think it's worth taking a little bit of a risk?
So my both panelists are on the opposite side of things. So I think I can conclude it like, it's a great asset class. The best thing about this is that price discovery is actually happening every second. So one side we have buyers and one side we have sellers. So there's nothing gray in the price discovery per se. So what I would suggest is definitely a very risky asset. It should not be used just for a short term and out of greed and out of making quick buck, because if you're trying to do that, then I would prefer to go to Vegas and actually gamble. If you can actually have a longer term view of investing in the biggest assets like Bitcoin and Ethereum, don't go and invest into small ICOs that are coming, that are multiplying in one day and going to zero in one day. Only invest in the top two big currencies, which are Bitcoin and Ethereum, that also in a staggered manner, so that there is no price going to zero. Your capital will always be protected if you enter in a phased manner. Don't go all in these asset classes. Very little amount needs to be invested. Slowly it needs to be invested. It actually, the investor needs to think this price might go to zero tomorrow. So in staggered manner, one can enter so that they don't miss out on the ride. It might go up, it might go down, we don't know, because it's totally driven by demand and supply. However, if you still want to be a part of this asset class, be in the top digital currencies, as I said, Ethereum, Bitcoin, because the demand for the big digital currencies, which will be
so all the same rules, all the same rules. No, I get it. So all the same rules of investment applies. Go for the steady components of that asset class, the steady players, so to speak. Hedge your bets, invest in small amounts, and definitely do your homework. If you're interested in it, maybe take the effort to figure out what it is all about instead of just getting into a situation where you want to invest in it because your friend, neighbor or relative has invested and claims they've made a lot of money. Well, that's the big message, I guess, coming across, which balances both sides of the debate. Thank you so much for joining us on this fascinating conversation.